Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Paul Auslander, president of SeaBridge Private Wealth. Paul, thank you so much for joining me.
Thanks for having me, Brittany.
The big, beautiful bill was signed into law by President Trump on the 4th of July, and it is nearly 1,000 pages, and it contains his sweeping signature policies, including extending and expanding his 2017 tax cuts. I would love to get your perspective here on the package as a certified financial planner. What do you make of it? What's your reaction to what's inside the big, beautiful bill?
Well, I think the primary thing is it extended and in some cases made permanent the tax cuts that he started with in 2017, which I think is really important because that would have resulted in a tax increase of significant proportions, which have had a negative impact on the markets. I think the thing that everybody's worried about is how does it impact the debt of the United States, right? We've collected somewhere in the neighborhood of 27 billion in tariffs last month. If those numbers continue, then Scott Bessent and President Trump were right that they can offset a lot of these tax cuts and a lot of this spending with the increased tariff revenue. But we don't know that to be sure, right? That's projecting out into the future. We do know that we'll be due plenty of interest payments. So that's the concern that I have. But in general, overall, it's a positive for the markets right now. I think you'll see it almost like lighter fluid on an existing flame. The question is going to be 26 and 27. What happens then?
And that is a big criticism of this bill, that estimates say it's going to add trillions to the national debt over the next 10 years. And I mean, trillions is such a big number, you can't even really wrap your head around it. And I work at Forbes, I deal with big numbers all of the time. And I think a question I get from just everyday people in my life when they hear that number, when they hear it's going to add so much to the national debt, I mean, the question I get is, what does that mean for me? How does that affect me personally? What's your answer to that?
Sure. Well, I mean, the worst outcome, and probably the most likely, is rising long-term interest rates, right? Um, James Carville once had a famous quote. I used to think that if there was reincarnation, I would wanted to come back as president or possibly a 400 baseball hitter. I'd rather come back as the bond market and intimidate everybody. And I think that's a big deal in terms of what we're talking about here. People worry about the stock market, but the bond market is really the thing you want to worry about in financial structures and in countries like America. And the bond market would react poorly to that increased debt. And I think that's the worry.
And I think overall, from the 30,000-foot view, the big beautiful bill is, like we said, nearly 1,000 pages, and it contains a lot in there of the sweeping policies President Trump wants to enact in the next 4 years. And just from the everyday American, I mean, their question again is, what specifically does this mean for me? What does this mean for my financial situation? What's your answer to that question?
Well, in general, the answer is a resounding yes, right? It's a pro-business bill. It cuts taxes on the wealthiest Americans, but it gives people of not great means other things too. Automobile deduction loans, something that hadn't been in for a while. Increase in SALT from 10,000 to 40,000. That cuts off at 500,000 of income, but prior to that, that helps a lot of people. Um, Again, it's hard to argue with a lot of the feel good measures in here. The question is that the prudent thing to do for our economy? President Trump thinks so, and listen, I'm an American, I'm rooting for him. I don't always understand the policies, but I hope he's right. The fact of the matter is, when you talk about large numbers, 25 billion or 30 billion a month, that's somewhere on the order of 300 billion a year times 10. That's a lot of money. So that goes towards offsetting that debt. You could think of the tariffs, if it works the way they anticipate, as a consumption tax rather than a tariff, right? Again, if it works the way they talk about. We know for sure we'll get increased interest payments. We don't know for sure if those tariffs will continue.
And another criticism of this bill was that it makes the rich richer, it makes the poor poorer. I'm curious, what about the middle class here? What about the people in the middle? What exactly does this do for the everyday middle class American?
I think that's the area where I tried to focus in the last answer, which is car loans being deductible up to $10,000, SALT deductions being increased dramatically. Even if you're not doing well and you live in Nassau County, New York, right, Long Island, you're paying $30,000 a year in income tax in property taxes, and then you're paying New York State income taxes. So the idea that you can deduct those things again is a huge win for middle America and middle class America.
And you work closely and have worked closely with high net worth individuals. What's their reaction to this bill, and what exactly does it mean for them?
They're overwhelmingly satisfied. A, for the permanent nature of the tax cuts that came in previously, but the very high end, like the fact that estate taxes have been increased to 15 million per person, 30 million a couple. The average quote wealthy person probably drops their taxes by 2 or 3%, which is a big number when you're dealing with some of the tax levels that they pay. So yeah, in general, they're quite pleased.
And so let's say I'm thinking about estate planning. What exactly would be your advice for that when it comes to what you're seeing in the big, beautiful bill? How would you approach that?
I don't think, I think it'll be much the same of what they've been doing the last few years. Trusts are still going to be in order because besides trust helping to negate some of the taxes for anybody with an estate over $30 million, it also provides asset protection, which is something that wealthy people worry about regularly, being sued, whether for legitimate reasons or illegitimate reasons. But in general, the estate planning is very much the same that it's been, which is continue to make sure that to the extent possible, we leave as much as we can to our kids and our grandchildren.
And kind of on the same stream there, what about investment decisions? How does this bill change the way someone should look at those?
It's interesting that you say that. When I first started in my career, the three things that you never talked about was politics, sex, and religion. Right now, the first thing that comes up in almost every investment discussion is politically, and from a politics standpoint, I've never seen either MSNBC and Fox are doing a great job educating people, or people just love to talk about it. But most of the conversations have to do with how should I invest based on President Trump's policies or a Republican Congress. I try to explain to clients that to keep that out of it to some degree makes as much sense as possible. Try to make decisions that are politically neutral. If you're a younger person, no matter who's in power, it's going to change 4 years from now or 8 years from now. So don't base your investments on that. Equities are still the way to go. And if you're worried about stock market volatility, don't open your statement. Just look at it once a year rather than once a quarter. If you're an older person, pre-retiree, or somebody who has in fact retired, it still makes sense to reduce your equities exposure so that you don't have as much risk. Obviously, if you have a loss, you don't have the chronological time to make it up. So that makes sense. But there are certain common themes, regardless of who's in political power, right? Defense spending is going to be up because we have Putin and we have China. You know that infrastructure is going to be something that's going to increase and spending is going to be there. AI is a revolution that's taken hold on the likes of which I don't think I've ever seen, and certainly others haven't seen. So there are certain common themes that are there that are investable regardless of who's in power. And I try to encourage them to think that way as opposed to the beliefs that you might have politically.
That's a really interesting point because I think, too, a lot of people in my generation grew up saying, you don't talk about politics, you don't bring that up. That is not an issue in polite society that you talk about. Now it's a different story. Now everyone is talking about politics in social situations. And it's interesting that that has leaked over to investment decisions. Why and when did you see that switch?
It's really been the last decade, amped up considerably during President Trump's first term and now his second term. But it was also very prevalent in the Biden administration, right? Inflation spiked during that administration. You can argue the root causes of it, but the bottom line is all of a sudden people had somebody to blame for inflation. It was the Biden administration's policies. And so you see this now seeping into most of the conversations. And again, I think the financial planner's role, if they're smart, is to try to separate that from the investments. And you can't ignore it completely. As an example, what's going on with the Federal Reserve right now might be a good example. You can't ignore what might happen completely, but by the same token, I wouldn't alter all of your investment decisions. Because of the way the world is starting to formulate and take positions in certain countries, defense spending was not something we talked about 10 years ago. You didn't really think that Europe was going to decide to rearm at a massive scale that they are now. To ignore that, you do that at your own peril, right? It makes sense to buy Lockheed Martin because of that, because you know these countries are going to be buying more F-35s. But the fact of the matter is, in general, you try to keep those tracks separate.
Do you think then that that's a misconception people have, that people either they like the president or they don't? They feel one certain way about their investments or not, and they infuse too much of politics into those investment decisions?
There's no question. Absolutely. I couldn't have said it better. They do that. And you know, one of the great myths that I always laugh about, and I have to go back and recheck it. Thank the Lord for ChatGPT, right? In most people that I talk to think that markets have done better during Republican administrations than Democrat. It's actually the reverse. It's not to say that that'll continue that way, but if you go back 25 or 50 years, Democratic administrations, and it's interesting why, right? Democratic administrations tend to spend more money than Republican administrations, at least in the old days. 5 years ago, that changed dramatically. But because of that, companies did better because of those increased expenses, and their stock prices went up. So you have to somewhat correct these myths with clients right off the bat. Nowadays, it doesn't matter, Republican or Democratic president, they're going to spend money like it's going out of style. So that now becomes a factor, right? What does that do to the bond market? And then we're back into that discussion.
And I cover politics mostly with a side of business, obviously, because I'm at Forbes. And so my conversations really for months have been about the big, beautiful bill. But I'm curious, have your conversations been about the big, beautiful bill? When you have clients coming in, are they referencing that by name? Are they referencing President Trump's policies by name? Or is that kind of shielded from the conversation a little bit?
I've never seen so much of an emphasis on the word alliteration. They love that best beautiful bill, all three of those B's, and they bring it up. It comes up regularly. Not so much from the investment decisions, but for how it's going to impact their taxes. They've heard that this is going to be good for my taxes. How does it impact that? And so you have to know that bill pretty well to understand that. And I'm a certified financial planner. I'm not doing tax returns. I can only imagine what my CPA friends and colleagues are going through.
And I do now want to switch gears. Now, there is breaking news right before you and I sat down, so it could obviously change by the time this publishes. But as of now, the headline is President Trump is floating the idea of potentially firing Fed Chair Jerome Powell. As of now, he has not fired him yet, but he's floating the possibility. What do you think of that?
Well, a couple of points, right? So I personally think it's a bad idea. Let me get that out immediately. And one of the reasons I think it's a bad idea is not agreeing or disagreeing with Chairman Powell. I have my own disagreements with some of the things that he's done over the past. But the fact of the matter is it roils the markets, right? That's something that particularly the bond market, but the stock market dropped when that news came out, some 250 points within 30 minutes. Markets don't like uncertainty. They particularly don't like the idea that this could be a protracted legal battle, because the fact of the matter is the president does not have the right to fire the chairman of the Federal Reserve other than for cause. I don't know if having an expensive interior decorator is cause, but they may use that as the reason. But yeah, I think any uncertainty, whether it was tariffs announced in March or the possibility of firing the chair of the Federal Reserve, that doesn't help the markets. And I think in this particular case, he's a real estate developer. He loves low interest rates. And one could argue that lower interest rates would help all Americans, right? Mortgage rates, car loans, everything. But there's certain economic principles that the Federal Reserve is holding to. And I think if you had an administration that has to deal with him until the spring of 26, that's not a long time to deal with. And the price to pay is not roiling the markets. I think that would be the smarter decision, but I'm not in power and I can't make that call.
And I think there are two separate questions here, really. One, is Fed Chair Jerome Powell doing a good job, in your opinion? And then the second separate question is, does it set a bad precedent if President Trump does ultimately fire him before that 2026 date? I mean, what do you make of those? Let's go with the first one. Do you think Chairman Powell is doing a good job?
So I think Chairman Powell was late to the party raising interest rates because he's so cautious and careful, and I think he's late to the party dropping interest rates, but not by much. And I don't think it's something. Again, the Federal Reserve is a tricky board to deal with. You've got a lot of experts sitting there, a lot of folks that have opinions. We don't hear the half of it when they come with their public comments. I do think he's been a steady hand on the tiller, and I think that's been comforting for markets. Markets have been up, particularly during a period of rising interest rates. If you think about how much the Fed raised interest rates over a couple of year period, and markets have still stayed solid, and unemployment has still stayed low. It's hard to argue that they haven't been successful, but yeah, you could pick around the edges. I think the second question is the easy one to answer. I think it's an absolutely terrible precedent for the president to do that. I think the for cause comment is always, anybody that's ever been an employee understands there are many different definitions of for cause. I'm not sure revamping, when he had approval from various sources, revamping the Federal Reserve's building is for cause, but I guess we'll find out.
And like I said at the top of this part of the conversation, is that as of right now, Fed Chair Powell is not fired yet. President Trump just floated the possibility. But do you think he floated this possibility to get Powell to bend to his political will? Because it has not seemed like Jerome Powell has been swayed by President Trump's past comments before, because President Trump has been very critical of Jerome Powell.
Yeah, the last thing this will do will get Chair Powell to drop interest rates. If ever he would not do it, it would be from repeated pounding from Trump, which he's not going to do. I think the strategy here is to get Chairman Powell to resign on his own. That would solve both President Trump's problems and any market issues, right? And I don't think he'd do. He's already said he wouldn't do that. So again, to your point, we don't know for sure. He hasn't resigned. He hasn't been fired. I think that'll be a story that will play out for the rest of the day. But my sense is if Trump moves in this direction, Powell's a tough guy. He comes from Carlyle, great private equity firm. Those folks are brilliant and they're tough. And I don't see him backing down lightly. And I don't think it's because of his ego. I think it's because he sees himself as a steward of the markets and a steward of the Federal Reserve, and he'd do what was right for the Federal Reserve. And in his mind, and I don't have any firsthand knowledge of this, but the way he acts suggests to me that in his mind, he has to stand his ground.
Well, there's certainly a lot to look out for. And as that story develops, because as I said, as you and I are talking, we got the headline just a few moments before we jumped on this interview. I hope you can come back on and I hope you can break it down with me. Thank you so much for joining me, Paul. I hope you can come back anytime.
Anytime. Thanks for having me, Brittany. I enjoyed it. Appreciate it.